Okay, so my name is David Kushner. I'm with Right Line Trading, and they call me the prop guy, the prop trader guy. Um, and I trade with the money flow tracker software that uses mathematical modeling combined with artificial intelligence. This is the team over at Right Line. That's me up there in the top right-hand corner. This is our disclaimer. Basically, this disclaimer is saying that we're not giving any buy sell recommendations. Don't trade with money you can't afford to lose. This is neither solicitation or offer to buy or sell futures options. No representative is being made at any account will or is likely to achieve profit or loss similar to those discussed in the webinar. Past performance of any trading system or methodology is not necessarily indicative of future results, and everything we talk about in this webinar is for educational purposes only. So if you happen to be a person that blows out a lot of prop accounts, and uh, then I'm the guy I'm the guy you should listen to because I only trade prop accounts, and most of my students trade prop accounts. So again, my name's David Kushner. I've been trading the markets for over 25 plus years. I trade stocks, options, I trade futures and forex. Not forex that much anymore, but my background was I had an automotive parts business that I started when I was 18 years old, and I had that business for 28 years before I sold it in 2005. And since then, I've just been a full-time trader. So, like most of you probably have a whole shelf, a hard drive full of indicators, trading systems that came with a lot of empty promises of helping you become more profitable and more consistent trader. So I probably have 3 or 4 hard drives full of stuff that I spent a small fortune on that I could never make work. So when I saw the webinar that Mark Sachs did and I saw the money flow tracker system, I quickly realized that this methodology isn't based around the same old indicators that everybody else teaches, but more based on mathematical modeling and triple and quadruple screen analysis. I now only trade with institutional money flow. So whenever I talk about institutional order flow or anytime I talk about money flow, I'm only talking about institutional money flow. And it's made me much more profitable, much more consistent. And now I'm running over a 70% win loss rate. And I've been trading with this software now for the last going on 5 years. So the agenda for this webinar is how the money flow tracker software works, a high probability setup, the unbreakable rules to follow, how I trade breakouts and sidestep losing trades with the money flow tracker software, the money flow tracker auto trader, and how to pass the evaluations and become a funded trader. So let's get into it. And those who stay till the end of this presentation, it's about 45 minutes. We have a very special discount plus some additional software. All right, so why are you here? You're here because you're not getting the results you want yet. Well, look, you're not here to waste money, neither am I. You're not here to waste your time. And you're sick of buyer's remorse. So what does that mean? Sick of buyer's remorse. Well, you get a system, you trade with it for a few weeks, you make money with it, and then you get into the proverbial losing streak where you might have a few losing days, you might have a few, whatever. And then you throw the system out and you go look for a new one. That's what I mean by buyer's remorse. And it's like throwing the baby out with the bathwater. I tell my students or anybody that when you get a system that you like, or not everybody can trade the same system. Look at the turtle traders, right? Um, and you have to commit to it. You have to commit 110% to learning that methodology, learning that system, as long as it's a profitable system, obviously, and stick with it. Don't jump around. That I did that for many years until I finally picked the system and stuck with it and learned all about it. So everybody says, well, then, David, show me a solution. What do I want? I want to hit consistent winners. Okay. I want a solid performance that repeats daily. And look, the markets are here every day for us to extract money from it. right? Do we extract money from the market every day? No. Why? Because when you trade with the money flow tracker software, it keeps you out of choppy, non-trending markets. Okay? I'm trying to turn off this. It's got on the bottom of the screen. It's got like tells me what I'm saying. It writes it out and it's blocking my screen, so I don't know how to turn that off. Anyways, all right, okay, I'll keep going. Let me go back to that slide. So what do you need? You need four things to create trading success. The first thing you need is software to provide you with a competitive edge over all other traders. The second thing you need is that edge needs to track the direction of money flow, institutional money flow. The third thing is etched in stone rules to follow, and this will eliminate discretion. And the fourth thing, which I believe is the most important thing, is patience. Patience. Patience the to let the trade set up. You know, the money flow tracker software will keep you out of choppy, non-trending markets. And those are the markets that people tend to lose money. I've heard this 1,000, 10,000 times. David, I take a trip, I have a great day one day, and the next day I give most of it back. And then the next day make a little more money. And then the following day I give most of it back. Right? So, those are the markets that we don't trade. Right? So let me show you some trades that we've been trading. This happened to be an options trade off a daily chart on a signal for 139%. It was another one on GME for 188%. This trade here was on 30-year bonds. Now this is 31.25 a tick. At 41 ticks, it's $1,281. Here's another one on the euro currency. I could sit here and show you chart after chart of trades, but you know what? That's not going to help you. And I'm here to help you. So it's likely you have a problem making money, or you probably wouldn't be here, right? Why? Because you don't have the proper tools to efficiently manage your trades. You overtrade, you revenge trade, and you make impulsive decisions. This is probably the biggest thing that traders struggle with. You lack consistency. You trade with indicators that lag price. You don't have a proven mathematical trade methodology, and all these things lead to blowing up trading accounts. So my commitment to you is to bring this to an end. All right? Nobody likes blowing up trading accounts. Look, I've blown up my share of trading accounts. I always buy my trading accounts when they're running 80%, 90% off, and I always buy extras. So if I blow an account, who cares? So be it. It was like, I don't know, I think I paid for my last 90% was like $15 and change, right? So look, why do they say that 95 to 98% of traders who use the following go broke? Price action, MACD, Elliott wave, divergence, price patterns, Fibonacci, Gann theory. Look, if you can make these things work for you, then great. But none of these things have any future predictive properties. Now, I am not saying, and I'm going to repeat this, I am not saying that the money flow tracker can predict the future. Because first of all, nobody can predict the future. And second of all, I'm not going to say something that's not true. All right? So we can't predict the future. I wish we could. Don't you all wish you could predict the future? And also, if you have any questions, just put them in the questions in the chat, and I'll answer every single one of them. All right. So Mark Sachs had over 35 plus years in the study of the field of applied mathematics. And he was a professor at Jefferson University for 8 years. And it took him 8 long years to engineer the money flow tracker software that can improve your trade performance. And we have over 500 traders between our 3 trade rooms that trade with us every day. All right. So before we get started, I would like to share my trade journal with you. This is my personal trade journal. I use a program called Edgewonk, and every day I go ahead and I download my trades from NinjaTrader an Excel worksheet, and these are all for every day. And then I click on this, and it uploads into this program. And it gives you the NinjaTrader trade ID, all the information, the entry, the date, the instrument, what it was, your P&L, the whole nine yards. You can put your commissions in here and everything. So here's my homepage. This is my stats for the year. We're at a 76.10% win rate. But look at the profit factor, 2.61. So that means for every dollar we're risking, we're making $2.61. And yes, we do have losing trades and we do have losing days sometimes. Okay, so this is all figured in here. We'll go to December, October. Look, I had 3 losing days in October. What did we do in October? October, we did $8,500 in October. This year has been really tough to trade, but we're doing okay. As of now, here's my equity curve for this year. We're up about $75,000 this year. Not as good as last year, but hey, look, if you could make $75,000 and work 2 hours in the morning, would you do that? Right? I don't think anybody in here would say, I don't do that. But the one thing why I'm bringing this up is if you look at October, you see these days where it says no trades, no trades, no trades. So look, we didn't trade 1, 2, 3, 4, 5 days in October. So basically 25% of the trading days we didn't trade, and we still did in October $8,500. Now, and this is the way it looks in every month. Look, September, we had a lot of days we didn't trade. August, we had some days we didn't trade. Look at July. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 13 days we didn't trade in July out of 20 days. What did we do in July? $7,382. So people say, well, why do you have so many winning days and so few losing days? Well, my answer to that question is if we would have tried to trade these days, these would have been losing days, right? Because the markets were choppy. In our losing days, I keep it under 500. All right. So I wanted to share my trade journal with you. I want you to show you my stats as far as my trade journal. So you can see that I am a trader and this is what I love to do. So let's keep on going here. So the market consists of many small retail traders represented by these little marbles, plus one or more large institutional trader represented by the big purple ball. Well, since you know that most retail traders lose money, why would you want to trade along with them? We don't. We trade along with institutional traders. And that's what we do because they are the ones that move the market. So the money flow tracker system has 3 key metrics that determine money flow. The first thing is triple screen analysis of correlative markets using our AI software. The second thing is triple screen analysis of order flow. And the third is triple screen analysis of the Laguerre for momentum. So what do I mean by triple screen analysis? Basically, I find that most people learn when you keep your terminology very simple. So I like to keep it simple. So for me, it's basically 3 time frames in agreement. That's what it means. It means that I have my trading chart, my mid time frame, and my higher time frame in agreement. That's what triple screen analysis means. So triple screen assessment of order flow is the first powerful force that moves price. So I know most people think when the order flow, oh my God, these order flow candles with all these numbers on the right, on the left, on the top, on the bottom, inside, upside down. Look, you can't look at all this numbers and make good trading decisions. Your brain can't compute all this and make great trading decisions while you're trading. So what we did was we said, look, let's get rid of all the numbers. Let's come up with our own order flow candles. So that's what we did. So our order flow candles, if the outline of the candle is green, means the delta of the candle is positive. And if it's red, means the delta of the candle is negative. So when I trade, This is the way I look at it. I have green candles. I have more buyers than sellers. I have red outlines. I have more sellers than buyers. So if I'm going long, do I want to go long on a red outline candle? Absolutely not. All right. And we have the wicks inside the candle. I'll explain to you about those in a little bit. So um, they're very easy to explain. It's like, all right, I have more buyers than sellers, and that's it. So this is what our order flow candles look like. And triple screen assessment of order flow means you have 3 time frames that the order flow indicator is going in the same direction. All right. So I wanted to put a screenshot of our charts up here because I wanted to show you how clean and easy to read our charts are. Right? All our indicators are represented by the colored lines on the bottom, our quants, our multiple time frame Laguerre, our modified Laguerre, and then we have the oscillator on the bottom. But the oscillator on the bottom is represented by the bottom line. All right. So the second powerful force that moves price is triple screen assessment of the Laguerre. And I'm also going to show you the wicks inside the candle. So again, we want to see the Laguerre going in the same direction on 3 time frames. And the wicks. So, do we have a drawing tool here? Oh, yeah, okay. Oh, that's cool. I didn't even know that. Okay, so look, when you have a wick, I'll change the color so it's easier to see. Let's go with blue. All right, so when you have a wick, the candle that closes, and next candle's wick opens from the previous candle's close. The next candle wick opens from the previous candle close. This one didn't. This is what we call a pullback candle. And I'll explain, and we use these candles to our advantage, the pullback candles. All right, so let me see. How do you erase all these? Oh, eraser? I guess. Oh, yeah, that's how you. Sorry about that. Anyways, I'm not used to this. I usually do go to webinar. Anyways, all right. And we use those to advantage. And then we develop what we call the modified Laguerre. So what the modified Laguerre is, oh, you have to erase everyone separately. Okay. So what the modified Laguerre does, it's an oscillator, but it doesn't show divergence like other oscillators. It shows strength of trend. So like before, I said that the bottom line represents the modified Laguerre. So when it crosses below 20, it will turn red. And when it crosses above and is sloping up, it'll be lime green. When it crosses above 80, it will be dark green. And when it crosses below 80 and is sloping down, it will be orange. Ultimately, we trade when it's pinned at 100 or pinned at 0, and that's when we get our acceleration dots. So I'm explaining to you each part of the system, and then I'll show you how to put it all together. And we get our acceleration dots. Now, our quant lines, we have 2 quant lines, and those are the third most powerful force to move price. And our quant lines are examined by 28 market components for correlation. Now, most people know what correlation is, and the name itself tells you what it is, but they don't use it, but we do, and we pay attention to it because it's super powerful, and most people don't realize that. That let's say ES is going up, NQ is going up, RTY is going up, everything's going up. That's what you want to see. You want to see all the indexes, all the metals, or all the whatever going up at the same time. Like for instance, let's say ES is going down, but the rest of the markets are going up. What do you think is going to happen to ES? It's either going to stop going down and go sideways, or stop going down and turn around and follow the rest of the market. So correlation is important. You know, it's like the old saying, a rising tide floats all boats. Well, it's kind of same in the market. You know, when I have YM going down and NQ going up and RTY going up and ES going side, you know, I don't feel like there's a balance there when I'm trading. You know, I like to see all the markets going up. And that's what our quant lines do. They tell us when they are. And we have 2, a short term and a long term. So the next thing we did was we decided that, you know what, 3 time frames in agreement is not enough to keep us out of trouble. You know, so we added a fourth time frame. So now we're not doing triple screen analysis, we're doing quadruple screen assessment. And it's called the C2 indicator. Now the C2 indicator just adds another time frame. That's all it does. And it's represented on the chart by this stair stepping line above the candle. Green going up and red going down. Pretty simple. Anybody have any questions? All right. Nobody has any questions? That's because I'm doing such a great job. All right. So let's put it all together. Money truck, the rules and the setup. The colored background means either green or dark pink. You have 3 time frames in agreement. The C2 indicator, what is the multiple? It's the Laguerre, it's multiple time frame Laguerre. The second, see, we want the C2 indicator. We want 4 time frames in agreement. The third thing is we have a solid and a dot dash line. We always want to see the solid line above the dot dash line, going up and below going down. If you run into, let's say, a pivot, right? Or you run into the VWAP, or you run into support resistance that's on the chart like this. This is the dash lines are pivots. We have higher time frame support resistance on the charts also. You must wait for 3/4 of the body of the candle to break that level, and then you must wait for a pullback candle. And I'll explain to you why we wait for the pullback candle in a little bit, right? The fifth rule, both quants must be in agreement. The top one is a short term, the bottom one is the long term, either red or green. The multiple time frame Laguerre must be in agreement with the quants. And the modified Laguerre must be in agreement with the quants and the multiple time frames. So everything must be either red or everything must be green. And the modified Laguerre must be pinned at 100 so you get the acceleration dots. Right? And that was the setup on this trade. And this was the exit. Now the exit is exit when the dot dash line changes color from green to red or green to yellow, or from red to yellow or red to green. We call it exit on line change. So this trade was 63 ticks. And this is not a regular 15 EMA. It's a special EMA that we developed. It keeps you in the trade longer if you don't get stopped out by trailing. All right. So, like I said earlier, one of the biggest, best things about the Money Flow Tracker software is that it keeps you out of choppy, non-trending markets. Because first of all, if you have a choppy, non-trending market, you're not going to get a setup. So you're not going to get a trade, right? And those choppy, non-trending markets are the markets that traders tend to lose money. That's why when people tell me, hey, you know, I made money one day, I lose it all the next day. I make money one day, I lose it all the next day, right? And that's why we have days that we don't trade, because we don't get setups and the markets are choppy or low volume. Remember, we're looking for a certain amount of volume. How do we know when institutions are trading? All right. So you see this number at the bottom of the chart. Waving, right? Well, the market's closed now anyway. So this number counts how many trades has gone through this market per minute. So every minute, this counts back to 0. So when we have a certain number here that we look for as far as volume per minute, that's how we know when institutions are trading. When we have a lot of volume coming in. So it's okay not to trade every day. I just proved to you that I make money every month, but I don't necessarily trade every day. I'm here every day. I come to work every day. I show up every day. But hey, some days you just don't have a trade, and that's okay. Live to trade another day. Okay. So here's a trade that I took on CL. Right. So remember the rules. Let's see. Remember the rules. All right. This is a pivot. broke the pivot. This pullback happened so fast I couldn't even get to push the button. Got this pullback candle. I pushed the button to sell on down close. Here's my entry right here. I took 10 ticks at this is CL, so it's $100, 10 ticks. Moves to stop, stop goes to break even, right? We'll go down, exit on line change for another 55 ticks. So that's $550 plus 100 is $650 on this trade. And I didn't do anything but turn the strategy on. That's it. So I did this trade here, and that's how you do it. All right. So trading with the money flow tracker software, it gives you clear and exact entries, clear and exact exits, and all your targets are pre-configured using our ATMs that you get with the software. Now, I'm going to show you how I trade breakouts with the money flow tracker software. I call it the pull back and go strategy. Right? So let me grab the pen here again. So here we have a pivot, and the shaded area is higher time frame support. So it broke through. Market's coming down. It broke through. Right? 3/4 candle right here. Got the pullback candle. So as this candle pulls back halfway, I place my order to sell on down close. Why do I do that? Well, markets that break support or resistance tend to come back and retest them. And why do they do that? Because when the market makers are running stops below or above support resistance, they come down, grab them, and go back up. So if we wait for the pullback handle, let's say in this instance, it went up like this, and this didn't happen. None of this happened here, right? Then if this candle closes up, this order gets automatically canceled. Automatically gets canceled. That candle closes up. This is a pain having to get rid of all these with an eraser. Thought they'd have something where you could just erase them all in one shot. Anyway, so this particular strategy has saved us. Well, today I think we had 3 of them that didn't follow through, that broke support. We got the pullback candle, they closed up. But this has saved us a lot. And I'm not talking a little. Some days we can get 3 or 4 or 5 of these sidestep losing trades. And yes, sometimes the market goes down and we don't get a pullback candle till down here. And if we do, the MA diff is going to be too high, and I'll explain to you what that is a little bit. We don't take the trades down here. Okay, so this has been a great strategy that I developed and has saved a ton of money. So here's one on RTY. Broke the pivot, broke the higher time, got the pullback. I placed my order profit target 1, profit target 2. Here's another one on crude oil. Here's 2 of them on the Canadian dollar. All right, that's it. So now we're going to talk about any more questions. Okay. Now we're going to talk about the money flow tracker auto trading strategy called the Revolution. It's an algo that we developed. It's called the Revolution. We just call it Revo. Revo strategy for short. Okay. So what does it do? Well, it took this trade here for 704 ticks. It took this trade here for 665 ticks. It took this trade here for 1,016 ticks. Let me show you my chart from today. I had a trade today on it, and yesterday we had a great trade. I'm going to show you. I want to show you live, right? This was on which account? Where is the account that this was on? There we go. Okay. Here's a trade here. This trade was 236 ticks. Here's my entries. These were live trades. Yesterday, Had another trade just like it right here. This one wasn't as profitable, but hey, look, 168 ticks. Some people don't even make that in a month, right? And this was just trading with the Revo on the MNQ. We call it the MNQ swing trade. It trades a 24 Norenko bar, a large bar, right? But what does it do? I'm going to show you. I'm going to open up the window because I get mesmerized by this screenshot, and I can show you better on the live window. Okay, so here's the Revo. STR means Revo strategy. I'm going to load my template. Okay, so I'm just going to load this one here. Okay, so remember the rules we just went over, right? All right. So look, we have first thing, what was the first rule? And the second rule, bias in C2, right? So this strategy doesn't wait for a pullback candle. So I have the strategy being delayed by, usually I do 2 bars. So this way I know that it's cleared the pivot, and it's not a stop run. We want the Laguerre, red or green. We want the multiple time frame Laguerre, red or green, right? The volume threshold, I don't really worry about too much. The 50-50 signal, the 15, we want red or green, and the 50, we want red or green. All right, we want the 50 above, below. The trend diff, I'm not using. The trend signal is off the trend line. The MA diff, 350. So what is the MA diff? I might as well explain it to you now. Get it out of the way. The MA diff is how far, this is the 50 period moving average. How far are we away from the 50 period moving average? Okay. It basically is our way of determining overbought or oversold conditions. That's it. But I got to tell you, when the MA diff gets to a certain number and each market and bar size is a different number, we tend to get a pullback within the next couple of candles. And I'm telling you, it works probably 90% of the time. Everything you get the anomalies and we get them. Anyways, so the quants, we both quants, red or green. Basically, we're telling the algorithm to follow the rules that I just went over, the manual rules. Now, the first target value is super, super important. Why? Because if you don't have right here at least 81 ticks to that pivot, let's say there's only 60 ticks to that pivot, it won't take the trade. It will wait until the bar closes and it will take the trade up here. So it does not trade into support or resistance areas. It waits until they are broken. All right. The bias signal, we're not using this. This is the only signal that I use. You can set it to go on and go off whenever you want. It has built-in risk management. So we have lots of traders that use this and subscribe to the Money Flow Tracker software just for the Revolutions Auto Trader because they have jobs. And this is what I tell them to do. Set up your session profit for 1,000, and set up your session loss limit for 500. And why do we do this? It's because they have jobs and they still want to trade and they just want to. So they set it up. They turn it on when they leave. When they're up 1,000, it won't take any more trades. So let's say you're in a trade, you're up 1,500. Okay, it's not going to close the trade at 1,000, but it will not trade again. So if you're 1,000 or above, it won't trade again. If you're down 500, it won't trade again. Period. That's it. So you're giving yourself a 2-to-1 risk reward here, and that's pretty much that's all the features that are here, all the signals that are here. We just upgraded this. So let's say you didn't want to trade with the C2, and you can set it up to just use the bias and not the C2. All right, and this has been really good strategy. I turn it on almost every day. If the markets are super choppy, it's not going to take a trade, right? So here's my equity curve for 2021. Here's for 2022. I do not have 2023 because I lost all my data on my computer when it crashed on 2023, but I have 2024. So last year we did roughly around $45,000. I don't know if I can move this. Oh, wait, let me move this out of the way. Okay. We did about closely $45,000 just on the MNQ swing trade that I showed you, period. Some people don't even make that in a whole year. And I didn't do anything on this except turn it on in the morning. Okay. So here's a trade that I was in. Was a great example. That's why I recorded it. It took this trade. It hit my first target like really fast, like within 30 seconds. So I turned on my recorder really quick because I wanted to record it because I felt that this was going to be one of those trades. So I recorded it. Look, we're up 79 ticks. I'm going to go forward. We're up 167 ticks. We're up 322 ticks. Now, the MA diff is right here in this corner. This number here, MA diff. So we don't trade it above 350. Remember? So I'm going to keep going forward. There's 322. Now we're at 372. It went over 350. I started moving my stuff. Hold on a second. It went over 350. I started moving my stop. Right? So now we're up 545 ticks. Now the MA diff is really high. I'm moving my stop closer. We're up 570 ticks. And we're out at 570 ticks. So we trade 4 micros. Two, and two. Most of the time I trade 6 micros or 8 sometimes. Anyway, so 4 micros, $80. Okay, comes up to $1 a tick. Take 2 off at $1 a tick, it's $80. Take the other 2 off at 65, $570. I'm sorry, 570 ticks. So 570 ticks and 80 is 650 ticks on this trade. 650 ticks. This was a great trade. $1,225. I wanted to share that because I like to, show people stuff that when it's happening. Let's see, let me go to my next slide. All right, so now we'll talk about how to pass the evaluation. All right. Don't focus on the carrot. Focus on the process. So I have my two friends. I have one friend, my friend Steve. He works for a brokerage firm, and my friend John is a floor trader. So I asked my friend John one day, I go, man, how do these floor traders make so much money? How do they trade and this and that? And, he says to me, he said, let me tell you something. He says, if you think these guys are out there saying, I need to make 500 a day, or I need to make 1,000 a day, or I need to make whatever a day. He says, you're absolutely wrong. They don't care about their profits. They only care about their risk. They're risk managers. So, the old stupid saying that I hate, but people say it, is that cut your losers short, let your winners run. He said that's what they do. He said they don't let their losers go very far against them. They manage their risk, period. And when they have a losing trade, they're out quick. And when they have a winning trade, they try to ride it for as much as they want. But when somebody comes into the room and they say to me, David, I need to make 500 a day from trading. Can you help me do that? I tell them no. And they're like, Chuck, what do you mean no? I said, I don't know what the market is going to do from day to day. Some days you might make 1,500 or 2,000. Some days you might make 200. I said, you can't do that to yourself. You're putting pressure on yourself to make a certain number every day. It doesn't work like that. you're going to be disappointed when you don't make your number one day. And then you're going to get into the habits of revenge trading, over trading, blah, 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 all that stuff. So you can't do that. Okay. If you focus on trading well, the profits will take care of themselves. I get tell you quick. I used to work at Home Depot part time when I retired because I was bored of being home. And you know what the owner, the founder of Home Depot's saying was, if we take care of our people will take care of our customers. And that in turn will lead to our success. And it kind of was a saying that's kind of stuck with me also, because if you focus on trading well, okay, the profits will take care of themselves. Trading is very, very mentally challenging because we all have certain expectations, and a lot of people's expectations don't work very well because the markets, you can't have expectations. So look, the challenger evaluations or whatever your particular prop firm calls them are really designed to make you fail. Like how many days, because of the parameters they put in, like how many days you have to trade to pass. Well, now a lot of them are doing 1 day pass evaluation, right? But it wasn't that way. It was 10 days to pass. So if you passed in 1 day, you still have to make trades every day for 10 days. And the trailing drawdown, which is probably is the biggest one why most traders fail evaluation. And there's no harm and there's no shame in failing an evaluation. I know really, really, really good traders that have failed hundreds or even thousands of evaluation accounts, you know, and they don't worry about it because would you rather lose your drawdown, which is 2,500 of a $15 evaluation account, or would you rather lose $2,500 of your own hard-earned money? So it's really not a big deal. So this is the risk per trade. This is my process that I do. Since most people, they think, well, I'm going to get a $50,000 account and I'm going to trade $50,000 account, and this that. Yeah, it sounds good, sounds impressive. Who the hell cares, right? You're not trading a $50,000 account. You're trading your drawdown. So if your drawdown is 2,500, that's your drawdown. So my process is I don't risk any more than 10% of my drawdown on any one trade. So I don't risk more than $250 per trade. So can I trade NQ? No, because a 40 tick stop on NQ is $200 per contract. So I have to trade micros and to stay within my risk parameter. Can I trade YM with a 20 tick stop? Absolutely. That's only $200 loss if I take a loss on that. All right. And CL, we trade with 13 tick stop. So I'm $10 over my 10%. So it's not a big deal. Right. So, your win rate versus your reward. So if you're a 1-to-1 trader, you have to be at least 60% profitable in order a 60% win rate to be profitable. Now, if you're a 2-to-1 trader, it drops drastically because you could be a 40% win rate and still make money, which means you could be wrong 6 out of 10 trades and still be a profitable trader. Now, if you're a 3-to-1 trader, it drops even more, which means you could be wrong 7 out of 10 times and still be profitable. So I'm like in between, 2-to-1 and 3-to-1 right now. So personally, I'm not even worried about it because my win rate is way over 60%. But I wanted to show you this chart to show you what your win rate versus reward is, just like this little mouse. Now, rather than avoid risk, take intelligent risk. And this will give you that competitive edge. Like I said, this little mouse, he wants that piece of cheese, right? What's his risk? That this mousetrap flops over and hits him in the head? So what did he do? He put on his helmet. That's what he called intelligent risk. All right, let's keep going. So look, I've showed you everything now on the software. and what it does and how it does. And honestly, one of the things that I was really drawn to the software in the very beginning was I don't need to have more than one chart up to tell me what's going on higher time frames. For instance, on this gold chart, I know right here that I have 4 time frames in agreement. I don't have to look at 4 charts and determine on each chart what's going on. I know that I have 4 time frames in agreement right here. I know here I only have 3 times in agreement because I don't have the C2. But here I have the C2, so I know I have 4 times. So I only have to look at one chart to know what's going on, right? So if you're profitable and you're making money, then God bless you and keep doing what you're doing. But probably for most of you, take action today. Join us. You know, you work. I only trade 2 hours a day from 9:30 till 11:30. You know, so all right. So here, let's get on. Keep going. All right. So the money flow tracker software, the benefits and features. It's easy to learn. It's perfect for beginners. Perfect for any account size. Hey, I have one guy in my trade room. He trades 100 to 150 contracts at a time. And then I have people in my room that just trade a couple micros, right? That's the way the guy trades. He's okay with that. That's what he does, right? Me, if I put on 150 contracts on something and move the tick against me, I'd probably be like starting to sweat bullets, you know? But it takes time to build up to that type of. It's perfect for Forex futures. You could trade, let me see, let's see, caption settings. I just don't want this thing. I'm so tired of looking at it. Oh, there we go. That's even better. Okay. It's perfect for any market, futures, Forex, stocks. You could trade options. You could trade triples with it. Let's see. Let me get back here. Okay. So for the first 10 traders today that come on board with us, we have some powerful additional software and more. So the first thing you'll get is the market scanner. This is my market scanner. I trade with Unirenko bars. This market scanner is for minute charts. Okay, so what does this do? Well, like for instance, like CL, we trade on a 2-5-10 bar. So I watch CL in this column. Gold, we trade on a 4-10-20. So I watch it here. Same on RTY. NQ, we trade on 8-20-40. So we have different bar size. So when this lines up, let's say this was CL, it would tell me, hey, you got a sell condition, which means I probably have doesn't mean that I have a setup. It means I have a condition. Go look at the chart. Okay, go look at the chart. The next, this is the 999 value, and you'll get that as part of your pack. You'll get our execution plot strategy. Okay, this is what we call the NDT. This is what we use to put our ATM here. This is what we use to buy on up close and sell on down close. And often I did a little study. So when I buy an up close and I'm in a long trade, I can click on close on down close. And if I get a reversal candle, it will close the trade. So I did a study on reversal candles. And I saw, just like here, that when I get a reversal candle, I tend to get 4 or 5 or 6 more candles after it. Here's a reversal candle. Here's 5 candles. Here's a reversal candle. I got a bunch of candles. Okay. Here's another one. Got a bunch of candles. So I figured that, you know what? Instead of letting it hit my full stop, if this candle reverses, I'm out. So I used that. You get the masterclass series on Forex futures, stocks, and options. These are great series. I've watched them. You'll get 1 month in my trade room. Now, our trade room was a part of a study by this Dr. Victor Allen. Okay. And what he did was he reviewed more than 225 trading websites and evaluated them using several factors, including transparency, proven track record, and assisting traders with educational material and online support. And we came out on top. And this was published in Traders World and Stock and Commodities Magazine. And I lost those publications when I lost my data. So now I back up everything to my Google Drive. All right. So this is our special deal that we're giving today. We're doing annual subscription for $9.97 a year, right? It was normally $23.94. This is a Black Friday special. Our normal price on it is $11.97. So $23.94 at 50% is $11.97. But we're doing $9.97 for you guys for this event. And we're doing 50% off of our lifetime, and we're doing 50% off of our quarterly subscription. Right? So if you click on the link that David just put in the webinar chat, it opens up this page. If you scroll down to the bottom. Oh, he didn't put the right link in. Oh, okay, Rory put it in here. All right. I have a different link that I was using. We'll bring you right to that page. Here we go. Copy. Let me post it. I'm going to post this link in here because it brings you right to the page. Okay. So let me go ahead and get rid of this. So that link will bring you right here to this page. Same thing. When you click on sign up, normally our room is $127 a month. We're doing a special deal here. Where is it, Rory? That stupid thing. I just saw it. I don't know. Save. Oh, 50%. Usually the coupon code is applied automatically. Okay, there we go. Okay. So when you subscribe, if you would like, we're giving a special promotion for the room for $4.99 for the whole year. So we just click on there and it will add it for the whole year. So which means that you're saving roughly 127 times 12. You're getting the room for 70% off. Almost 60% off normal room. And just go down here, you're going to get your name. Here's your discount. And next year, in 2026, when you renew, you're going to pay the same price you paid now. So we're not going to bait you in for the first year and then triple the price over. We don't do that. We never did that at Right Line Trading, and we won't do that at Right Line Trading. So for next year, you'll pay the same price as you pay this year. Okay, so you have to put the coupon code in, save 50%. So if you click on that link, it'll bring it up to there. All right, so let's keep going. So my commitment to you is when you subscribe to the Money Flow Tracker software is to help you become a successful trader. Remember, if you're not successful, it's not your fault. Again, if you're not successful, it's not your fault. You're just not using the right tool to be successful. So I like to use the analogy like try to pound a nail into a piece of wood with a screwdriver. Yeah, if you sit there long enough, you'll get that nail in the wood, right? But if you use the right tool, the hammer, you're done. 2 seconds, it's in, right? So a lot of traders don't realize that, look, I meant to tell you about my friend Steve when we were doing the part of the passing the evaluation. My friend Steve, he works at a brokerage firm, and he says to me, he goes, Dave, we love it when retail traders open up a $5,000 or $10,000 account. I said, what do you mean? He says, we call them the guppies. I said, the guppies? He says, yeah. He says, we know those accounts are going to be blown within a week, 2 weeks, a month, maybe even 2 months, right? That's how market makers and institutional traders look at retail traders. And that's why retail traders don't have the success that they want. Okay? If you want to be successful, you have to trade with the institutions. Bottom line, look, the Money Flow Tracker software is totally unique and give you that edge you need to trade with the institutional order flow. So again, my commitment to you is to teach you not just about how to read the setup, but also to help you develop that mental mindset. Mental mindset you must have to achieve financial independence. Look, it's very hard to sit here and not take trades, but I'd rather not be in a trade wishing I was than be in a trade wishing I wasn't. So you know that we all know that it's a well-known fact that 95% of 98% of day traders and swing traders are losing money. Just like this guy here, retail trader, might as well just flush his money, right? Well, if he's flushing his money, who's taking it? Institutional traders, institutional order flow. So do you want to be this guy or do you want to be this guy? Right? Our traders make money because we trade with institutional order flow. And when they're not trading, we're not trading. Bottom line. So again, we're doing $597 quarterly, $997 for annual subscription. That's $200 less than we normally charge. Like, when we do a special 50% off, we're doing an extra $200 just for this event, and $1996 for a lifetime. So this is a reel of a whole bunch of our traders talking about the money flow tracker software. But this particular woman has a friend that's in my trading room. And she asked him she wanted to learn how to trade because she sees how much he's making a ton of money. So he didn't want to teach her. He said, look, contact Mark and he'll help you. He didn't want to be responsible. And I understand that. I wouldn't want to be responsible either. So to make a long story short, it says here, Mark providing with the charts, the software, and everything. He sat her down in front of a computer. He taught her the setups. And for 4 months, that's all she did was paper trade. She gets the setup, she pushes the button, and that's it. I talked to her on the phone, and I said, hey, you trade every day? And her answer to me was, me no have no setup, me no have no trade. That's it. That's bottom line. No setup, no trade. Here's a guy that sent this is a Trust Pilot review. He can stay here. I've been trading 25 years, and I can actually say the money flow tracker software is the smartest tools I've added to my toolbox. The layout of a single chart gives me everything I need at a glance. That's exactly what I just showed you. This particular guy was in a webinar just like you are, and he writes in the questions box, I'm the world's worst trader. I've been thinking about quitting trading, but I like your software, and I like what you're talking about, and I like you. Will you help me? So I said, yes. So he sends this email to Rightline like 2 months later. He says, I started watching David's trading room every morning. I learned his trading methodology. More important, his rules for trading. We only take specific setups. When we follow the rules, we have around a 70% win rate. I now have 7 accounts of VLOX and 7 accounts funded at Apex. I mean, 7 at Apex, 7. Well, now he's got 20 at Apex. He's got 10 at VLOX, and he's got accounts in other different firms. Goes along and says, the money flow tracker software, along with the methodology and the rules, allow me to act like a robot and eliminate any guesswork or emotion from my trading. We use the NDT, which I just showed you, which allows us a single push button to enter a trade when we see the correct setup. So every day it's simple for him. See the setup, push the button. See the setup, push the button. See the setup, push the button. Don't get a setup, don't push the button. And here's a guy that says to me, I am the world's worst trader. So then he sent me, a few weeks ago, he sent me this that says, $4,265, I could ring the bell. Look at the time he left, 10:36. Traded for an hour and 6 minutes and made $4,265. Again, this is our special price that we're giving only for you guys. This $997 is going to go away, I think, after Royston midnight or so. And that's it. That's all I have. If you would like to contact us and talk to us about anything, you can always go to our website, rightlinetrading.com. We have our phone number right here. Where is it? Come on. Come on. I don't know why. Right line. Oh, that's not it. Why wasn't it? Here's our phone number right here, 786-732-4656. You can always contact us or whatever. And that's all I have, David. I kind of stuck it within the time zone.